welcome everyone to Chargehound's Payment Innovator Series. My name is Adrian Sanders. I'm the CEO and co-founder of Chargehound. Chargehound was recently purchased by PayPal, and we're happy to be a part of that team. I interview people from around the fintech community, focused on fintech, payments, fraud, etc. This episode, I am live with Nik Milanović. Nik has spent the last decade working in microfinance and fintech, and he's an advisor to Tribal Credit, as well as being an investor across 50 plus early stage fintech startups. He is the writer of This Week in Fintech, a weekly summary and analysis of everything happening in the fintech industry, as well as being a writer on fintech for publications like TechCrunch and Forbes. Welcome, Nik. Happy to have you here.
Thanks. Really appreciate you having me on today, Adrian, and I'm really excited to talk.
Cool. Yeah. So, I mean, you as an investor in 50 plus fintech companies, as someone who's writing about it all the time, just off the bat, what are the things that you're seeing that people should be paying attention to, trending in fintech now? Sort of top three things.
Oh man, there are many things trending in fintech. It's I mean, if you're in this space, it's really gotten notably more hectic over the last 2 years. There's been a step function change in how many people are starting new companies, and it seems like every time a new idea starts up, there are 5 different competitors in the space almost immediately, and it moves really quickly, which I think can be a little bit trying on people. Some of the more interesting concepts that I'm seeing, though, and this is even just over the last couple of months, are number one, and this won't be a surprise to anybody, we're seeing more of a hybrid between pure fintech plays and the world of crypto and decentralized finance, which I think the TLDR for me is that fintech has done a great job over the last decade creating better, more responsive, more tailored, faster product and user interfaces. But a lot of the backend infrastructure for financial services has remained largely untouched. And it's still in its infancy, but that's part of the excitement and the promise of decentralized finance is it's really an infrastructure play. And the idea is that you should be able to create new kinds of products that formerly couldn't exist with more analog fintech infrastructure. So I think that that's kind of one exciting area. The other interesting ones that I'm seeing are entire payments and tool suites built for creators. Depending on what you feel about the creator economy, it definitely seems like a new employment class, but it's an employment class that doesn't have the conventional tools to manage the finances of the business that other, more traditional small businesses do. And so we're seeing really interesting development there. And then lastly, just tons and tons of API infrastructure plays. Power is a company that launched recently. Quilt is another one, I believe, based out of the UK. But just APIs that are meant to connect different pieces of financial services together. I think that's part of why you're seeing this huge boom in fintech. It used to be pretty hard to launch a fintech company. There were a lot of independent vendor contracts you needed to sign and then get those systems up and running and then build a translation layer to connect those systems to each other. And now there's just out of the box, vendor management and orchestration layer tools that I think are going to make it much easier and much quicker to launch a new fintech company.
Yeah, no, for sure. I mean, Chargehound is built entirely on sort of the APIization of, payment processors and, what issuing banks and acquiring banks are sort of being dragged along to comply with. And so, we definitely see, well, we've sort of seen that in our own personal experience, but it seems like that's just the tip of the iceberg of what's going to be happening moving forward because, there just seems to be so much greenfield at the moment. Talk to me a little bit about something that you wrote. You recently wrote an article about the winners of the future on fintech. And sort of, I think winners is always an interesting idea because it's like over what time period. So talk to me about the next decade. Like what does a winner over the next decade look like?
Oh man, it's always so dangerous to write those articles because you're like, give it a couple months and half of this stuff is already going to be dated.
Right.
The article basically was talking about a few trends that were at the early stages of their emergence. So I wrote it. I mean, in my defense, I wrote it in December 2019. And so I think this is what we're starting to see play out that was accurate. Number one is like this whole trend of embedded financial services. And what that means is that platforms that really have nothing to do with fintech are going to be in a position where they can start offering financial services to their end users. And this will be another way to generate more value within the ecosystem and to monetize users more effectively. So what's an example of that? Like, I have no indication that this is happening or will ever happen, but if Airbnb created a renter and a homeowner, credit market where people could, basically rent on credit, and then guests could rent on credit, and then homeowners could also, establish new residences on credit, and this credit market just powered more transactions on the platform. Like that would be a really interesting way to introduce financial services and also drive up sales. That's kind of the end goal there. So I think you're seeing a lot more service providers start to embed fintech into what they're doing. And so when you see an acquisition like GoDaddy buying a point of sale and payments platforms that websites can monetize directly through GoDaddy, I think that's a good example of that happening. The other trend I talked about in that article was basically I wrote this long article saying this is what's going to happen to financial services, and here's how I could be wrong. And at the very end said decentralized financial services could come along and basically upend all this and disintermediate traditional financial providers. And then we had DeFi summer last summer, and this summer a lot of these protocols have just shot up in the total value locked within them. And I think it's still super early days. No bank is going to get replaced by a DeFi protocol in the next year, but we're starting to see some indications that this could happen in the next 2, 3, 5, or 10 years. There are a lot of kinks to work out, but I think that that's pretty exciting. And if that comes to pass, it's basically going to override and undo all the other predictions I made about how more fintech will centralize with larger service providers. So I would say that article is probably going to be like 75% plus wrong in another year.
I mean, 25% right is pretty good. If you're an investor, I think you take 25% any day of the week. So, okay. Well, we're talking about DeFi. Tell us, for those of us who don't know, what is DeFi? What is so exciting about it, and why now? Why is everybody sort of talking about it all of a sudden right now?
Those are good questions, and the answer I think is kind of different to all of them. All right. So maybe just starting off with what is DeFi, and I think that there are a lot of people who have more nuanced subject matter expertise than I do to answer on this more appropriately. But the basic idea is that decentralized protocols can be built and coded for specific financial use cases, whether that's lending or creating a store of value savings account, creating instant payments infrastructure, creating a derivatives market, or even, most recently, I think just this week, there was a JV announced of a company that plans to create a DeFi protocol-based tokenization of all NASDAQ stocks. And the flexibility of the contracts that are built on top of some of these protocols allows you to create basically rules that have much more interesting applications. You can have treasury for a company that automatically, gives out equity to its employees based on hitting certain events, for instance. You can have a payroll system that executes daily or minute by minute or second by second, over time as somebody's fulfilling a contract rather than, waiting for the standard kind of biweekly payroll distribution date. And then there are these, exotic product types like flash loans, where the loan's executing based on a series of validations in such a way that if one of the validations doesn't occur, the loan doesn't end up executing. So you're basically taking out collateral in order to make a loan, but that collateral is immediately returned. That just could not have existed in the traditional financial services ecosystem. It's still super early, and there are a lot of kinks to work out with exploits, with hacks, with rug pulls from project founders who walk away with all the money, with people auditing smart contracts and then finding ways to drain the total value locked in these pools more effectively based on minor omissions in the contract. And so I don't think it's going to replace conventional financial services overnight, but you can see where the promise is going. And the last thing I'll say, to your question about why everybody's kind of excited about it now. I think people are excited about it now for reasons that are going to be different than the reasons that DeFi has staying power in the long term. Right now, kind of like any new tech development, you have a lot of people. You have a concentrated group of people making a lot of money. Over time, as a lot of these protocols stabilize and gain institutional adoption, I'm assuming, kind of see the arbitrage opportunities go away, and you'll see the yields compress a little bit. And so, right now is kind of the Wild West period where people are making a lot of money. I think that's why everybody is talking about it. Kind of like the 2017 run up in crypto prices. But over time, a lot of the primitives that are being developed now can create really kind of radically fundamental changes in the world's financial architecture. You can have a payment system that allows anybody to send like a stable store of value payment to anybody else anywhere in the world at basically zero cost and immediately. And you can have rules-based triggers for how this payment is sent. You can have time series for payment distributions. You can have basically conditions that need to be met for like a loan repayment, and it can be done based off of identity and KYC that's universally available, like regardless of what your country is. And that it's just really hard to anticipate like what kind of opportunities that's going to enable in the future. Where I could start a mom and pop shop, in Moscow or Nairobi, and I could raise money from investors in San Francisco and Lima, and that can all be done instantaneously over the web. It's kind of hard to anticipate like how big and revolutionary this really could be, but it's going to take a while to get there, in my opinion.
Yeah, no, I think that's a great way to think about it for sort of the layman is, what are the inefficiencies in banking and in financing today that make a lot of financial opportunities cost prohibitive or too complicated, or take too much time to understand, that sort of remove people from opportunity, right? And I think how do you? I think what I think about embedded tech and DeFi, I think what can be really interesting for both of these things is that as participants become more sophisticated, and as sort of the technology around them helps us make better decisions. So in the case you're using of like the hypothetical Airbnb or whatever, that like, hey, actually we know a lot about this buyer and we know a lot about this seller because we know this market better than anyone else. We can offer really interesting products for them, right? DeFi, I think, similarly has this vein of it, which is, well, we don't need the traditional expensive checks and balances of the centralized service. In lieu of that, we have something that's more transparent, that has more automated controls, right? And that should be more rigorous, right? And obviously the caveat is we're in the Wild West of DeFi, and it depends on who's designing the system and all of that good stuff. I think that those sorts of trends, for me, are worth contextualizing around just the general push for fintech startups. Is just that there is this new world that's emerging. Do you find that there's any tension between the old world and the new world from an investment perspective, like talking to other investors or new startups that are coming out? Is there some like, well, wait a minute, this is too scary or too crazy, or or do you feel like the savvy people have sort of picked it up?
I think every fintech investor is stressed out right now. It seems like there's so much opportunity and the feedback loops are so quick in terms of growth, and there is so much noise in the space, but it's kind of unclear how much signal there is, and everybody's crossing their fingers that the noise to signal ratio is close to 1-to-1, but like we're gonna have to kind of wait a while to understand that. But I also think, if you're an investor in an early space, a big part of what you have to do is lean into risk and establish really good a priori principles and reasoning for why you're investing, what you're investing in, and where you think the world is going to go. And then stick to those principles and stick to your guns over time, rather than letting, kind of moment by moment changes, really sway your reasoning. And so excitingly, I mean, you're seeing companies do this too now. A couple of minutes ago, I said, even though, you see DeFi banking services now, DeFi companies or DeFi protocols are not going to replace banks for the next 2, 3, 5, or 10 years. But you have companies like Eco, which is building, a high APY consumer banking account, with a token, possibility, and like with a protocol on the back end, and they're basically saying, why wait? If protocol is going to replace banking services in 10 years, why not just do it now? And I think these companies that are leaning into the risk a little bit more aggressively are going to really win out over the next 10 years. And so if you're, a conventional financial services provider, your option set is always 1, ignore, 2, build, 3, partner, or 4, buy. And everybody was hammering the 1 button for the last, 4 years, ignore it. And, with good reason. Like, it's a highly regulated space. There's a lot of downside to making a mistake by, entering a new product area. But, there are people who have been saying for the last 10 years, crypto is inevitable. And I think a lot of institutions are waking up to that, and financial services providers, you see them now partnering with crypto institutions like, PayPal and Paxos's great partnership to enable crypto functionality. You see them buying some crypto native institutions, and you'll see them, building kind of de novo crypto products themselves. It's kind of starting with a lot of the banks' wealth management arms, but you'll see companies build a whole variety of exotic crypto products, in traditional financial services over the next few years.
Nice. Yeah, I think that makes a lot of sense. For you, when you're looking at DeFi, and for anyone interested in investing in it, how do we avoid the wild west, or how do we de-risk to a certain extent?
I don't know if your job is to like avoid the outlaws. I think it's just to pick up a gun and start running with them. Maybe that's a little bit cheeky, but I think the signals that matter the most to me at the early stage have to do with the extent of the vision of the founding team, themselves. Like, do they have subject matter expertise? Have they worked in a similar space? Have they worked together before? What do other people say about working with them? And then kind of how competitive and buzzy and kind of hype driven the market is. People generally find it harder to build in super competitive early markets. But there's a lot of kind of qualitative assessment at the early stage, and I will not claim to be an experienced investor by any standard whatsoever out there. So I'm sure that there are much more knowledgeable and principled people to ask than me. I mean, I will say that kind of common mistakes that people talk about at this stage are investors overfitting to profitability and business model at the seed stage. If you can build a product that makes a lot of people happy and has high affinity and low attrition, like a smart team can figure out a way to make that pan out from a money perspective over time. And the other, early stage issue is overfitting for a total addressable market. Like TAM just kind of, I'm always curious when I see these slides and pitch decks, like why they're in there. If you have a great and a smart founding team, like they can have the narrowest possible entry wedge and use that as a really effective leverage point to build into a much wider market over time. You just have to kind of trust them rather than trusting your own assessment of how big the market really is.
Yeah, I think TAM is often a crutch in investor decision making. It's like, well, it could be worth $1 trillion because the TAM is infinite or whatever. So, but it's the slide. Every VC fund wants that slide. So that's why it's in there. Getting back to embedded tech a little bit, I think embedded tech is, outside of crypto, right, is kind of the future. And I've always thought this, and obviously Apple Pay, et cetera, sort of these are clear-cut examples of it. But again, I loved your example of like a hypothetical Airbnb. But where do you think embedded tech goes, or do you think it's extremely disruptive? Are we going to have Airbnb's lending versus traditional bank lending competitively, or are these always going to be sort of niche products that are just like hyper verticalized?
I'm going to borrow an idea from Lex Sokolin, who works over at Consensus, but he had a good comment recently where he said the idea of going to a fintech store or a finance store is going to be pretty anachronistic soon. Where today, if you want a car, you go to a car dealership. If you want clothes, you go to a clothing outlet. And so if you want financial services, you go to the financial services store, which is a bank. But that will probably change pretty drastically over the next 10 years. And so when you think about like embedded lending on Airbnb, I don't think it's necessarily Airbnb versus banks. When a homeowner is thinking about who they want to take capital out from in order to grow like their total rentable footprint. It's just that I think a lot of the back-end financial services providers, whether they're fintechs, whether they're banks, whether they're DeFi companies, are going to find ways to more nimbly
offer those products. Yeah,
exactly. Like meet customers where they're at, and then move from just being there when customers have the need to anticipating the need, and proactively offering financial services, and then moving from like a permission-based, like anticipate the need, and then the customer, takes out a loan, to just providing it because you have enough data on who the user is that that this is the product that they want when they want it. So like with these new like overdraft replacement products, that when somebody maxes out their debit card spend, that what they really want is to pull some money out of their savings account to cover that over fee. And it's pretty easy to like create an if statement that like tells you that the customer is going to want that. But whether it's like taking out a home loan or a personal loan or a student loan or a new credit card or sending money to your kids or contributing to a 529 account, there are so many other financial transactions where we have this huge amount of user data and data exhaust being created at any one time, that if you can leverage that and centralize it and use it to make decisions, like you really services that they need when they need them, where they are, without even having to ask permission. So I think we're still a long way from that, but that's kind of where I think this is building to.
Yeah, I think that makes sense. You cut out a little bit there, so I don't know if maybe your AirPod might have died. But what I was going to say is to this, I think a really great example of this is like buy now, pay later, or pay in four, et cetera, which is like, to your point, you don't go to the pay in four website. You as a consumer just want this product, an electric bike or whatever. And, these sorts of services are available, and, it's up to the fintech industry in general to bring those services to the merchants and, to the consumer at that point of contact. So, I also agree that I think these things have to be highly collaborative. We don't expect an e-bike store to become an expert in pay in four technology and credit assessment, et cetera. And if they don't have to, that's even better. It's better for everyone. So tell us, we just have a few more minutes here, but tell us a little bit about your weekly summary, This Week in FinTech, why we should subscribe and check it out, and what we can look forward to.
Man, I don't know why anybody subscribes to this thing, besides my mom because she's proud of me. Fintech has really kind of captured the zeitgeist over the last couple of years, and I'm flattered that more than tens of people actually read this newsletter now. But it looks like I'm hard to hear right now. Let me try switching off of my phone microphone, see if it works.
Sure.
Okay, can you hear me okay now?
Yeah, that's better.
Okay, perfect. So, I don't really know why most of the people who read the newsletter read it, but the mission has stayed the same for the 2+ years that I've been writing it, which is there's so much happening in this space that it's really pretty exhausting to keep up with all the news. I actually started the newsletter as an internal one for my team, and then forwarded it to a couple friends, and they said, "This is great. Can I subscribe as well?" And it grew from there. The goal of the newsletter is just to provide like a very concise and easy to read weekly summary of everything going on in the space, so that if you're the founder of Chargehound and you have a million tasks that you have to do on any one day, keeping up on all the news isn't one of them. You can just read the whole thing in 5 minutes over a cup of coffee on a Friday morning, and then just say, okay, great, I know what's going on, and go about your day. And if you need more info or detail on any of the news items, like the links are all in there so that you can click on them. So, our goal is not to be the smartest or the deepest dive or the most analytical experts, but it's really just to provide people with the coverage they need to understand what's going on in the space.
Awesome. Well, cool. Nik, thank you so much for your time and for jumping on the interview session. I really appreciate it. I love learning a bit more about DeFi from the deeper perspective versus my cursory understanding of it. And yeah, for all of you watching or who are tuning in later, check out This Week in Fintech to subscribe and stay more up to date with what's going on in fintech.